Alright, so you're a beginner. You decided you want to start investing in stocks and you ain't got no idea where to get started. Look, it's nowhere near as difficult as you think it may be. Or I should say, it doesn't have to be as difficult as you think it may be. You know, for one, you don't need that much money to get started. You can get started with a little bit. That's $25 with the Robinhood app. All you need is $25 to fund your account, and then from there you just you could just buy a share of a stock that's $25 or less. Keep in mind there's gonna be a fee. If you just open up with Ameritrade, that's just $50 to fund the account. So these are very, very, very small increments amount of money, right? And of course, I'd advise you invest way more than that. However, not necessarily invest all of your money up front. All right. So let's say if you had, it's like you just decided like, yo, I got extra $10,000 in savings. I'm not doing nothing with. I'm about to invest it in the market. I wouldn't necessarily advise. See, most people would say just don't put all your eggs in one basket. Diversify. Me personally, I'm not that big on diversification. You know, I think you only need a few stocks, and if you know what you're doing, that's all you need. To me, diversification is more for people who's not that. The more unsure you are, the more uncertain you are, the more you don't know what you're doing, the more diversified you should be. I'll say that. But the more studied you are in a particular company, and then more certain you should be. And I don't mean just because you know a lot about it doesn't mean it's gonna go up. You know, it's just whatever you studied from it, and the more you find reason to believe that it will go up, the more that company you should own. Now, starting off, so let's say if you had like 10 bands, $10,000, and you find a stock or two, because like even with $10,000, I'm not, like me personally, I've never really owned more than 6 or 7 at a time, and that's diversified as hell for me, you know. And I only have that many because I own, you know, you have, to me, what I call super companies: Facebook, Apple, Amazon, and Google. I own 3 of those 4, and that's just because I think they like too big to fail. They're gonna be around for a while. They do everything, literally everything. Like Google might fuck around and drop a refrigerator tomorrow or something, for all I know, if they don't have it already. But outside of that, you know, I have, well, I'm not gonna get a whole portfolio, but I have like 4 stocks outside of those 3. So I own do I own 8? I might own 8 stocks. I gotta double check. Besides the point. That's besides the point. The more certain you are, like for instance, I'm on public record with my PayPal investment. I was pretty damn certain about that. So I had like most of my, probably about half, a little bit over half of my portfolio was in PayPal. It was like 60% of my portfolio was in PayPal, and everything else was just kind of scattered out with other things. But most of it is PayPal, and it's not because necessarily I thought it would go up the most, but I was just more certain that one would go up. You know what I'm saying? Because you know, like Bitcoin went up the most, and that had the most momentum, but I wasn't that sure. That was more speculative, so I didn't risk as much. You know, and I was only expecting maybe 30% from PayPal since we was having a good year overall in the market. That's the most important thing to consider when you're investing in stocks, is how the overall economic conditions are. And I was just certain that PayPal would give me a positive return for this year. So I put most of my portfolio in there. Even if it only went up 10%, you know, fine. I just knew it was high odds it would go up, as opposed to going for a long shot, saying like it could go up as high as, like, I'm also on record with a penny stock. I might as well say it publicly now. It's RLS Pharmaceuticals. Matter of fact, let me check where it's at now, because I ended up just calling off the trade as a whole. But even when I bought some of it, they still kind of like it around the same price when I got it months ago. But when I got it, you know, I could see it going up to, it was worth $1 and some change at the time. As a matter of fact, it might have been even less than $1. And it pretty much like doubled in a few weeks. That's when I started telling people. And I could have seen it going up to $7 or $8 easily, but not so easily, because I could also see it going down. It was more speculative, so therefore I didn't invest as much of my portfolio in that one. Even though I seen that one had more potential, I wasn't as sure on that potential as I was in PayPal's potential, although I didn't see PayPal going up nearly as much as I could see or less pharmaceuticals going up. You see what I'm saying? That's how you gotta think about it. But kind of getting off topic. But I say that to say, the more certain you are about a stock, that's the more money you should put into it. And maybe you only got one stock on deck at the time. And when you start buying into it, just buy in 1,000 or 2. Assuming you got, let's say, I'm just using $10,000 as an example. Just buy like 1,000 or 2, probably like no more than 2,500 when you initially go in. And then from there, continue to keep researching and studying. And then the more certain you become in your hypothesis, and the more you're seeing reality confirm your hypothesis, then you can keep putting more money into it because you're becoming more certain and you're seeing it play out. It may not always work out like that. Sometimes it may go up, maybe it goes up for the wrong reasons, and then you find something that you don't like, so you just get lucky and just pull out and probably start something new. Or maybe you let what's in there play out and see if things change or whatever the case may be. But the point is, I wouldn't go all in the first day of investing. That's basically what I'm saying. Not just on one stock especially, but even if you were diversified, even if you had like 5 stocks you liked with the 10,000, I would still only go in like 1,000 each, and then see from there which ones of the 5 that I like, that you would like more, and then put more into them as time goes on. You want to kind of ease your way into it, and you also want to keep accumulating over time. So every check you may get from your job, or every little bit of free cash flow you may get from a business you run, keep adding to it over time, and you're gonna get that compound interest effect. Okay, so I guess that's my tip for the day for beginners is, get your account open. That's nothing. Ameritrade, Robinhood, that's cheap. Just no different than setting up a bank account. And when you find the stocks that you like, you don't have to go all in. Now if you only, starting off with $50, and that's fine, whatever. That's not no serious money anyway. But assuming you had like a decent amount of savings, like, okay, because a lot of people, a lot of us may not have 10,000 to invest with, so maybe like something like 1,000 or 500. Let's say 500. And with $500, you could go all in. You can go all in with something that small of an amount, but the more money that you have, you don't have to go all in necessarily. You know what I'm saying? And stocks it's a long-term game. It's a long-term game. That's not nothing you just get rich with overnight. It happens, but not all the time. But what does happen all the time is people get rich after about 5-10 years in stocks. Oh yeah, 20 years. Oh yeah, that happens all the time. All the time. That happens all the time. So have future income coming in. Dedicate a percentage of that to your stocks as well, and keep going in a circle, bro. Follow me on my social media, Blaqamore. I'll put it on the screen somewhere. Book is available on Amazon. Everything you need to know about stocks. For now, I have the link somewhere. Whether you watch this on Facebook, YouTube, or whatnot, the link will be somewhere. Or you can hit me up for it. I'll send you a copy of the ebook for free. Because it's more.